Hi everybody, my name is Doug McKay with Trader on Call. Here we are in September of 2009. Big run-ups in the market lately. What I would like to show you guys is exactly how I manage my money in client accounts, and I can get it done in less than 4 minutes per day. So I want to introduce you to 3 levels. Before we do that though, what I'd like to do is go over a little bit of the history in the last 10 years of the S&P 500 and why buy and hold is dead. As an example, if you would have put $100,000 into the S&P and just bought and held, and I'm not taking into account inflation or devaluation of the dollar, in 1999, 100 grand, and bought and held, today in September of 09, you'd be down 22%. So you went from 100,000 down to 78,000. And that includes the big 57% run-up that we've had off the March 9th lows. So what do? What we like to do is time the market and at the same time be diversified. We're not trying to catch the bottom or the tops. We just want the fat in between. So what I'm going to do today is introduce you to 3 different levels. And by the way, you can follow me for free on these 3 levels for 3 weeks with absolutely no obligation on your part. So let's talk about these 3 levels here. Now, whether you are a seasoned trader or you're brand new to this, the way our system is set up, it's designed for, again, whatever type of trader you are. And our goal is not to day trade. What we want to do is time the market where we're really trend following. We want to follow the trends and make money in both directions. Having said that, let's start out with the SPY trader. Very simple. We use one ETF, the SPY, which represents the top 500 stocks, so we can track the S&P 500 with the SPY. As an example, right now, as of today, 9/18, we are 70% long the SPY, 30% in cash. If somebody's coming to me today with all cash and the post that's going to go out tonight, we're only going to go 30% in the SPY and 70% in the cash because the market is very, very extended here at this point. Okay? Now, that is the SPY. And again, you receive an email 3 to 5 times a week telling you exactly what we're doing in the SPY and also percentages. And I know you can get this done in less than 4 minutes a day. And this makes a big, big difference, especially if you have 401k money. Because you can always find a basket of S&P 500 in your 401k. And you don't want to lose a lot of money in the old 401k by buying and holding. Okay, so that's SPY. And again, if you're brand new, you can use this. This is very, very simple to follow. You can check out our videos below. The 4-minute trader, this is very unique. This is how I manage other client accounts as well. What happens with the 4-minute trader is, again, 3 to 5 times per week, you guys receive educational copy and a table. Inside the table, it tells you what ETF, exchange traded fund, or stock we're buying or selling. We could be going long, we could be going short. It tells you what percentage of your portfolio that particular ETF or stock would represent. And then it also tells you where we're buying it at. But most importantly, you guys, it tells you where we're putting our stops. We want to protect profit and limit loss. This is a game of probabilities. I'm not here to sell you a dream. We want to deal in probabilities. We cut our losers short and quick to preserve capital. We let our winners run. That's the only way I manage my money in client accounts. And moving forward in these uncertain times, you have to let go of your ego. You have to take small losses. So again, you can sign up for any of these for 3 weeks for free, and you always have access to me. That's the 4-minute trader. Again, this is just SPY, one symbol, 500 stocks, individual stocks and ETFs here, and then the M48. Now, this is our most premier level. It's the exact same table as the 4-minute trader, individual stocks and ETFs, both long and short, what percentages, where to put your stops in place. But also, this includes video, screen captured video 3 to 5 days per week, where I voice over the various charts so you can learn at the same time. The ultimate goal here is not only to make you money and keep you out of harm's way, and the ability to time the market, and again, not trying to catch the top or the bottom, but the fat in between. But I really want to teach you. I don't want to hide anything from you. I want to show you the processes that I've used over the years and what has made me successful as a trader and a money manager, especially in 2008, when we were out of the market, live on the radio, 9 out of 12 months. And by the way, for the first time this year, We were in the market live on the radio, and you can check out all the various posts and blogs on March 12th, 2009. But anyway, that's the M48. You get the videos. Any of these you can sign up for 3 weeks free. Okay, lastly, what is our goal here? Well, let me give you an idea as to what we've done last year. Last year when the S&P broke through 1200, we were clearly out of the market. We did not step into the market until the 12th. Once we turn this corner, again, we're not trying to catch the bottoms or the tops here. What we want to do is get the fat in between. We never want to try to catch a falling knife. But we stepped into the market for the first time in March of this year, March 12th to be exact. We did not go all in. We went 33% in. As price increased, we increased. We never want to increase as price drops. Now, if this market would have rolled over, we would have got out, taken a small loss to preserve capital. Now, here's kind of where we're at today. To be very specific with you, we are in basically the second or third week of September. We've had a huge run up here. So again, if you're coming to us new right now, I would have you sit in the majority of it being cash. We have overhead resistance here on the S&P and on the Dow and on the NASDAQ. So there's a gap to be filled there. What is my point? Well, my point is we're very, very close to a top right now in the market based on what I see technically. So we're moving our stops up to protect the gains that we've had. But I think what's really important is what happens if this happens, okay, over the next several months, possibly starting next month, maybe in the spring. If we go back down, you guys, and test and or break these March lows that we put in 6 months ago, not only do we want to get out and preserve capital, but we want to be able to short the market. Okay, all getting back to the same thing, buy and hold is dead. The bottom line is no one will watch and protect your money better than you. Let me help you. You can follow me for free. You have access to me. And that's it, you guys. This is Doug McKay with Trader on Call, and you can always follow us too on our weekly roundups. Take care and happy trading.